Folks, Aya Gold and Silver has seen better days. The equity is currently down by 10% as a result of their third quarter earnings, which, based on price action, clearly disappointed investors. They suspected the disappointment in advance, however, labeling Q3 as a transition quarter in what we suspect was an effort to soften the blow for investors. It's not so clear that the strategy worked based on the market reaction. By the way, guys, a quick shout out to Zolt Zobko 9817 in the comment section who suggested we cover this topic and Aya Gold and Silver's earnings. If you guys suggest stuff in the comment section you want us to cover, we are on it. All right, guys, we are talking Aya Gold and Silver. We're talking Q3 earnings. Let's dive in. All right, let's start with the high level. Aya in the third quarter reported top-line revenues of $11 million, which was down 6% on a year-over-year basis from 11.7. Cost of sales went the opposite way, climbing by 65% from $5.5 million to 9.1. An explanation for the increase wasn't really provided by the company, with Aya basically just saying underground development was completed as planned, while the open pit saw contractor performance and costs in line with plans. The strip ratio, however, came in at 11 at the open pit, leaving us to believe this was largely the costing problem. Total silver sales during the quarter amounted to 404,000 ounces, with the average realized silver price coming in at just over $27 per ounce versus $21.53 last year, a 27% improvement. The gain on realized silver prices, however, was heavily offset by the cash cost per silver ounce sold more than doubling, going from $10.73 to $23.47 an ounce, with the company again providing little explanation for the massive increase. Gross profit as a result sunk by 70%, falling from $6.2 million in the year-ago period to just $1.9 in the recent quarter. This led to an operating loss of $3.1 million, a 184% decline on a year-over-year basis, and a net loss of $300,000 or 0 cents per share. Comparatively, the year-ago period saw net income of $1.2 million or 1 cent per share. Operating cash flows, as you likely guessed, also took a hit this quarter, falling from $7.7 million in the year-ago period to negative $6 million in the third quarter of 2024. Cash and restricted cash as of September 30th stood at $73 million as compared to $103 million as of the end of the second quarter. All right, so let's get into the operations. From an operational perspective, Aya Gold and Silver in the third quarter produced 356,000 ounces of silver, a 31% decline year over year from the 519,000 ounces, as well as a decline of 18% relative to the second quarter. This decline is despite ore processed jumping by 19% from 70,000 tons to 83,000, with the decline attributed to the average grade of material processed cratering from 261 grams per ton silver to 161, a 38% drop. To make matters worse, recoveries also slipped, falling from 86.6% last year to 83% in the third quarter. On a segmented basis, the open pit mine saw 60,000 tons of ore produced at an average grade of 178 grams per ton, while the underground mine produced 61,000 tons at an average grade of 119 grams per ton, with the latter coming in lower than expected. The underground mine was also fraught with developmental challenges, with cement backfill delayed by 2 months, making it so that high-grade stopes could not be mined. And operations were halted as 3 other stopes were suspended for rehabilitation, with the stopes requiring rework. As a result, production largely came from low-grade zones at the underground mine during the quarter. The underground performance was bad enough that the company revealed grade had improved in the fourth quarter so far, with October seeing grades of 196 grams per ton silver on average, with total production hitting 144,000 ounces. So why was the third quarter called a transition quarter? Well, because Aya Gold is currently heavily focused on completing the expansion of their Zgounder mine, with the expansion project said to now be 99% complete versus 95% complete as of the end of the second quarter. Commissioning is said to be ongoing at the mine expansion after having started late in the second quarter. The processing plant is also said to have commissioning ongoing, with the facility 99% complete. Electrical upgrades and underground development is complete, while production from the open pit and underground is ongoing. And in terms of capital spend, $159 million of growth and sustaining capex has been incurred by the expansion project to date, with an additional $7 million expected to be spent before things are done. But things are taking longer than expected, which has led Aya to cancel all prior guidance for 2024. Now, the company expects to produce between 1.6 and 1.8 million ounces of silver in 2024. Previously, guidance called for between 2.6 and 3.2 million ounces of production in 2024 at a cash cost of between $13 and $14.50 an ounce. In simple terms, guidance on a midpoint basis has been cut by 41%, with the company now providing no insight as to where they expect cash costs to come in at, which is not a good look, considering there's only one more quarter left in the year. Okay, so let's wrap it up. The third quarter proved to be a tough one for Aya. Despite previously expecting to close the second half of the year on a high note thanks to the Zgounder expansion, they were instead left labeling Q3 as a transition quarter in an effort to keep investors satisfied. But that guidance cut tells the real story here. The lack of costing guidance after having cut production guidance so dramatically does not bode well for the fourth quarter results. Should they be able to improve production numbers outside of the expansion, investors might be a little bit more forgiving. But that remains to be seen. I'll leave you with this thought though. Silver names continue to be hot. Aya is talking a big story, and if they can do anything close to what they've guided to in the past, it's going to be really exciting. I don't know that this is one of the names that's a must-own silver name, but it's certainly one that you're going to want to keep an eye on as the silver bull market continues to go full throttle. Okay, so we recently had a pullback in silver, and you're probably saying, well, it's not really full throttle. I'll say this. I chatted with Rick Rule yesterday, and he made a good point to me about the whole Donald Trump DOGE, Department of Government Efficiency, starring Vivek Ramaswamy and Elon Musk. And his point was, this is just going to be another government department that's going to require more money. And the way that the government system works, they're not really going to be able to cut much of anything. So in the long run, Donald Trump is going to be great for precious metals. And I couldn't agree more. But silver also has a little bit more silver lining. And that is that we're in the fourth year of a silver deficit, according to the Silver Institute. And the world needs more silver. So I think that regardless of what Trump does, silver is going to have a pretty good 2025 and potentially a spectacular 2025 once the market really digests what Donald Trump's really about. All right, everybody, thanks for watching. If you got other earnings videos you want us to cover, let us know in the comments section. And we appreciate all the engagement we're getting from everybody. It's really charging us and getting us excited about making these earnings videos for you guys. So please keep liking them if you're enjoying them. And if you haven't already, please hit that subscribe button. All right, everybody, thanks for watching.